Today, global stock markets plunge again as the Middle East crisis intensifies.
Plus, oil and gas prices continue to climb on disrupted supplies.
And President Trump's shipping and insurance protections offer only partial relief. This is Reuters Morning Bid, bringing you unfiltered market news and analysis straight from the Reuters newsroom 7 days a week. I'm Anna Szymanski in London.
And I'm Mike Dolan. It's Wednesday, March 4th.
Well, it's a new day, but it's the same story. The Middle East conflict shows no signs of abating, and markets are responding pretty dramatically. What are we seeing?
Yeah, day 4, and little or no sign of this de-escalating anytime soon, I think. And there's a lot of hopes in the market that recent conflicts like this seem to dissipate very quickly within a few days. That doesn't seem to be the case. And energy prices still climbing, but the Asian markets today particularly got a battering. The best performing market of the year by some distance is plummeting. South Korea's Kospi, which is its benchmark stock index, fell 12% today, its biggest one-day decline ever.
And that has to do both with, a risk-off sentiment, also the fact that Korea is obviously a net energy importer.
Yeah, I think a lot of the Asian markets are particularly exposed to energy, big energy importers, Japan, China, and Korea, and big manufacturing bases as well, not least in the tech space, obviously. And their energy needs clearly now an awful lot more expensive, and there's a risk of that supply disruption lasting a long time. So a great degree of nervousness. But I think the other factor, of course, is that the markets that were doing so well prior to this are the ones which are, as you'd expect, suffering most. And I think maybe as portfolios, mixed portfolios around the world, go back to some more neutral settings and even some building cash, then clearly these are the markets that are going to get affected most. And then Japan, the Nikkei, which was down almost 4% today, was also one of the best performing markets of 26 so far.
Well, some of the other best performing assets early this year were obviously precious metals. And gold has not performed exactly as one would have anticipated.
Now, this is a really peculiar story, right? You would have thought the classic safe haven is gold. That's kind of what people were buying. It's almost doubled over the past 12 months. And suddenly you get the crisis that most people would think would send gold surging. And it, yesterday at least, fell about 4 to 5%, and silver down 10% or more. Now they stabilized a little bit today, it has to be said, but it is peculiar as to why this hasn't happened. And there are a number of reasons. One is exactly the point we were discussing. One of the best performing markets gets sold up. There has also been a big jump in the dollar, and I think that is related to two things: a search for liquidity. And liquidity in the sense of just dollar cash around the world. If there is a need for being able to transact without having physical holdings of anything, then dollar cash is kind of the default place to go. And there's also the idea that the United States, of course, relatively speaking, is less affected than other economies in Asia or in Europe from a protracted energy squeeze.
And so now going back to energy prices, obviously, they have risen, but given the scale of the conflict, everything we're seeing, they haven't actually risen that much. And that really does speak to the fact that the U.S. is, while they're the biggest energy consumer, they're also the biggest energy producer.
Yes, and that's the whole, that's changed geopolitics in itself over recent years. The very fact that the U.S. is almost self-sufficient in energy, certainly in petroleum products, it's a net exporter. In liquefied natural gas, it's also a net exporter. I think after the Ukraine war or the Ukraine invasion 4 years ago, the US clearly becomes a very important exporter for many regions, not least Europe. So there's all sorts of factors at play there. But I think also it brings us to the other development overnight, which is President Trump's attempt to kind of calm the energy markets, or at least calm the supply disruption, by offering the possibility of shipping insurance that is difficult to come by right now for obvious reasons.
Going through, obviously, the Strait of Hormuz.
Yes, going through that particular narrow waterway that's now effectively blocked, and also holding out the possibility of U.S. naval support for convoys coming through that, which is not unprecedented. It happened, I think, shortly after 9/11, and also during the Iran-Iraq War in the 1980s. So there is some precedent for that. But some of that might help calm U.S. energy markets relative to global. But it's really something that would take weeks to organize properly. I think most people feel that is not a silver bullet by any stretch of the imagination. And also that speaks to the idea that the longer this squeeze lasts, the more problems and more damage it will create.
Yeah, 100%. It just seems like, while yes, you have had an increase in oil prices, given everything that's happening, given the scale of this, it's honestly quite surprising that oil prices haven't increased more than we've already seen. And going back to something you said earlier in this conversation, markets are used to these energy crises being resolved relatively quickly. Obviously, we have the ongoing conflict in Russia and Ukraine, but markets have, adapted to that. And so it seems like that's being used as a model, but this situation seems quite different.
And I think the big problem as well is that even if you could see over the horizon some calming of the situation in the Middle East, when you come up for air, look what's waiting for you. I mean, there's an awful lot of worry about the credit markets, private credit markets again this week, which has been rumbling for a few weeks at least, if not months. And of course, the question marks over AI and all that disruption. So it's not exactly clear water when you finally surface.
And for today's recommended read, check out Mike's column on why gold has failed to rally as the crisis has unfolded. The link is in the show notes.
And for more on any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favorite podcast player, or if you're on a smart speaker, just ask for the latest market news from Reuters 7 days a week.
We'll be back tomorrow.